Hi everyone, my name is Vendik and you are welcome back to the channel. So today we are going to discuss stop loss because I got this message from one of my followers saying that my strategy doesn't have a stop loss. Okay, I think maybe I just overlook it because probably I was assuming everybody knows where to place a stop loss. So I promised him today that I'm going to do a video, okay, explaining where to place a stop loss because I've actually fallen a victim of this where market actually gets me out of the market. Okay, I'll be stopped out and then the next thing the market will actually reverse and then go to that same direction. So that's actually wrong. Okay, it simply means you are doing something wrong. Or if market should take you out, it simply means your analysis was totally wrong. That means you should be going the other way around. But it doesn't mean that you should take the opposite, okay? That's not what it means. It doesn't mean you should take the opposite, okay? But it just means that your analysis at that particular moment was wrong if you're okay. So you really need to know where to place your stop loss, okay? So instead of adjusting your stop loss, okay, so that it will be a tight stop loss, okay, instead of adjusting to have a tight stop loss, instead of that, I think you should adjust your lot size, okay. Let the stop loss be the stop loss, okay. Adjust your lot size so that you can, okay, get exactly how much you want to lose per that trade, okay. Let your stop loss be determined by the market, not by the lot. Okay, there are some persons say I just want to lose a $30 on this trade, okay, so they just get into it with maybe 0.1 or 0.2, okay, lot size, and then a kind of because they want to lose $30 or $50, they will adjust the stop loss to where $30 is or $100 or $50 is. Okay, that's actually wrong because market will take you out. That's the simple truth. Market will take you out. So what I'm going to explain today in the chart is that we will actually look at market structure, okay, then let the market determine where we want to place our stop loss, okay. So with that, you get safe, okay. So that means most of the time market, there's high tendency market will come into your stop loss zone, play around with it, and then still go back and then hit your TP. That's how it's supposed to be, okay. So the kind of, I think I call it a breathing space. Give market a breathing space. Despite we are trading setup one, if you get into the market at setup one, there's high tendency that market will come back and retest that zone, okay, that it breaks out of, which is the setup one breaks out. So the next candle will drop a wick, okay, and during that process of dropping that wick, you're going to be in loss. Okay, so that's the strategy. So I see this happening all the time. So it's rare, like very, very rare for you to see market just kick out and you get in and it continues hit your TP. It happens, but most of the time, every candle is originally meant to have a wick. So that wick, okay, is going to put you on a drawdown before the overall direction. So let's get into the chart so that I won't make the video to be very long. All right, let's go back to the basics of price action. All right, so price action create a lower high, higher high, and a higher low, higher high and a higher low for uptrend. Okay, so if this should be it. All right, if this is your entry, if this particular point is your entry, okay, let's get this right. If this particular point is your entry, all right, what you should be looking at is that, okay, you get into the market here, all right, this liquidity sweep, okay, your stop loss should be below it. All right, so if this market kind of break below this particular zone, all right, it simply means the market is going the other way around, okay, because if this character is changed, right, if this character is changed, if this particular place, okay, this other handle gets to here, breaks below this particular low, it simply means the market is kind of maybe going to consolidation, okay, range, or the market is going to reverse. Those two things are involved, okay. If a low is being taken out, it's either the market is going to consolidate one, or the market is to reversing. Two things are involved. So this, when this previous liquidity sweep, okay, so your stop loss should always be below it. your stop loss should always be below it. This is the concept, right? So you get into the chart here, okay? Your stop loss should always be below the previous liquidity sweep or the previous swing low. Okay. So if market kind of gets to that point, breaks it, because until it breaks it, that's when it can create a new low. All right. So if market creates that new low, it simply means the market is actually reversing or is going to consolidate at that point. Those are the two things involved. So make sure that you don't just get into trade here, all right, and then you put a stop loss somewhere here, all right. That's not it. There's still liquidity here that can decide to come, and you don't know if you have a fair value gap or anything that market just needs to come and grab some liquidity and then move up, right? So those are things. So let market create these liquidity zones, create this stop loss zone. Sorry, right? Let market create this stop loss zone, not you. All right. So now, if you decide to say, okay, the entire stop loss that the market creates is up to 50 pips. All right. So you should now look at your target on that move. Okay. So if your target is just 20 pips, that trade doesn't worth you taking it. There's no need of taking that kind of trade because market always presents itself of such. Okay, the target where you are intending to drive the market to, it's kind of very, very small. But the stop loss that the market can decide to go and test, okay, is kind of very big. So those kind of trade, just stay away from it, because what you are risking to get what you are looking at, it's the reward is very, very poor. So you don't take those kind of trade. But market will always play out itself and align itself and give you this 1:2. So now when it gives you that 1:2, 1:1.5, okay, you should actually adjust your lot size, okay, to meet up with the money you want, not the pips, all right, not the pips. Adjust your lot size for the pips of the SL to match with the money you want to lose. That is as simple as that. So I believe this answered this question very well, because I try as much as possible to tell the guy, okay, fine, see, it's market that creates a zone that you place your stop loss, not you yourself. So you need to follow that same rule. This is where this trade takes me out. Okay, this is the setup one I get into. A break above this setup one. Okay, this is where I place my stop loss below the previous swing low. Okay, please, let's pay attention because I don't want the video to be very, very long. Okay, so on this trade, sorry about that. On this trade, okay, we were downtrend, right? We were downtrend on this, and my first target was 1:1. Okay, this was my first target because I have LTA here. You remember, I have LTA here, so I don't just get into random trades. Okay, but I was wrong. Okay, market decide not to do it, so it creates a low. And you see, character have changed here. Okay, it creates a low. All right, so gets back, grabs some liquidity, comes back. A break above that particular low was my entry point, so I get into it. That's the strategy. I get into it. So I was expecting to drive this trade till this point. So all this jack was part of the story. Okay, I know it gives me so many opportunities to go out, but I was trusting this thing because it didn't break also below the previous structure. So that's why so when it got broken, all right, that was when I was okay, fine, I got out of this trade. Okay, simply means the market is not going my direction. It's either it's going to consolidate or it's going to reverse, which it reversed. So when I got this strong momentum, right, and I got a reversal into this place, I get into it again, right? And then what was my stop loss? My stop loss was below the entire swing low that it created. Look at it, below it. So if you measure this, this will be like close to 20 something pips SL. Okay, so 20 something pips SL, it doesn't mean that okay, I will now start to, because maybe I'm doing 0.02, I'm going to lose roughly, let's say $80 or $70 on this. If I'm sticking out to maybe losing $30 on this trade, I will adjust my lot size so that I will still lose $20, $30 on this trade. Okay, so that's the point. Okay, so now this was a 1:2. This was target one, target two, and the trade plays out very clean, right? Plays out very clean. Okay, so that's what I'm trying to say. So you get your stop loss not by pips. My SL is always 5 pips. My SL is always 3 pips. My SL is always 10 pips. Okay, no. Okay, market should create the SL, not you. Okay, the instrument you are trading should create the SL. If you are trading gold, all right, this small move I'm just drawing here, even in 15 minutes, would be like 2,000 point move. So how will you calculate that? So let market trade be the one to generate the SL, okay, not you, right? So have these zones and then mark them up. So I believe this explain SL very well for me. Okay, so you when you get stopped out, you are stopped out. Okay, you look out for another thing. All right, you are not going to be. There is no guarantee. There is no tutor. There is no mentorship. There is nothing that will guarantee you 100% in the market. Right, nothing like that. That kind of thing doesn't exist. To be sincere with you, that kind of thing doesn't exist. Okay, so please, if you find value in this video, okay, don't forget to do the YouTube business. And if you are new to the channel, consider subscribing, and then we'll keep you updated when it has to do with trading. All right, so I'll see you in the next episode. Peace out.